Susie, you know, Apple's numbers were out yesterday, but the company was all the talk today. It was the day of reckoning.
Yeah, whether you were in your office, at the water cooler, and trading posts on Wall Street, yes, everyone was talking about Apple today. Its stock, its earnings, its iPhones and iPads, and even its competitors. So why is everyone so obsessed with Apple? Whether you know it or not, chances are some of your money is invested in Apple, now the second most valuable company on the planet. And today, Apple was one of the most heavily traded stocks in the S&P 500, 34 million shares traded hands. Jon Fortt takes a look at why Apple is such an important company to Wall Street and why it matters to just about all of us.
Even if you don't own an iPhone and have never set foot in one of the glass-rimmed stores, Apple's a stock you should care about. Why? Well, because it's owned by so many 401ks and pension funds, for one. Nearly 2/3 of Apple shares are owned by institutions, including CalPERS, New York State Pension Fund, and BlackRock. Not only that, but Apple's stock movements influence some widely held index funds and ETFs. In funds like the QQQ, which tracks the biggest stocks in the NASDAQ, Apple makes up more than a 12% weighting, nearly twice that of Google. That's enough to make Apple's stock moves a concern for the whole market.
A significant percentage and overweight percentage of the returns in the S&P 500 over the last 2 or 3 years have been because of Apple stock. So if Apple swoons, it is going to impact many indices, and it is certainly going to impact many fund managers that perhaps were overly confident about the prospects for this technology company.
Apple's product cycle has a big influence for better or worse. Take the iPhone. Before it was introduced 6 years ago, smartphones looked like this. Now here's the latest HTC and Samsung phones, touchscreens and nary a keyboard in sight. If you owned BlackBerry, Nokia, or Motorola shares over the past 5 years, Apple became a pretty important stock to know about. The iPad 3 years ago? A big launch for Apple, sure, but it was even bigger for HP and Dell, which have seen their PC businesses implode. Now there's a new reason to care about Apple: cash. Apple boosted its dividend 15% yesterday to $3.05 per share, making Apple the biggest dividend payer in the world. It also authorized a massive buyback, so the total cash return to shareholders will total $100 billion by the end of 2015.
One of the problems is, yes, Apple is managing to lower growth expectations, but it's doing so because it is now suddenly losing share. The smartphone market is not saturated, but Apple now finds itself losing out to more diverse and better priced Android alternatives.
CEO Tim Cook acknowledged on the call that Apple's growth has slowed and its margins are coming down a bit. What's a lot less clear is whether investors will continue to embrace it as a growth stock or relegate it to value territory. Either way, it's going to be an important story to watch for more than just Apple stockholders. For Nightly Business Report, I'm Jon Fortt.